What's up, everyone? Welcome back to the channel. We're back again for our regular Friday episode with Fabian. It's going to be a great show today because we're unpacking the outlook for 2026. We're going to look through the business cycle. We're going to look at what's happening behind the scenes with the smart money, with the institutions in order to work out what is going to happen next year for crypto. We're also going to chat about whether the Bitcoin bottom is in. I've given my opinion on the channel this week, but I want to get Fabian's opinion as well. And at the end, we've got some special altcoin alpha for you, which I think is the number one area to be focusing your attention on heading into the new year, because it's where you can extract a bigger edge than other areas of the market. And I think it's going to be very interesting for a lot of you. So Fabian, welcome back to the channel again.
Yeah, thanks. Great to be here. These are always fun to do.
I think we could just hop straight in. I'm just going to ask you a question straight up. Do you think the Bitcoin bottom is in? Because I've done a video on it, and I did a thread yesterday, basically to summarize my theory here. The market reaction to news has been quite good despite the influx of negative headlines that we've seen over the past week. The FUD typically marks the bottom for crypto across things like China banning Bitcoin, Tether FUD, Bank of Japan, like all this stuff typically marks local bottoms. I compiled all this evidence this week. We have also seen that flows have started to shift from bearish to bullish. Obviously, there are still some caveats here, and that's why I'm not 100% certain. Like, there are still some potential DAT overhang. There's still, some macro headwinds, which I'm sure we'll discuss today. But overall, I think balance of probabilities, given all the information available, I think that the bottom is probably in, but I want to get your opinion. Is this where you're leaning as well, or do you think the bottom is not in?
Yeah, no, I'm pretty much in line with that view. At least, okay, so the way I would frame it is that I think that peak capitulation is over, right? And we talked about that a little bit on last Friday's stream too. Essentially, we saw capitulation hit extreme levels across, a variety of metrics. And since then, like you pointed out in that thread of yours, which was a really good observation, we actually did pull back a little bit just at the beginning of this week on Monday, right? We came down to around mid to high 80Ks area. And that was on the back of another kind of round of FUD, right? So over the weekend, just last weekend, we had kind of more concerns emerge around MicroStrategy. We had Japanese yields blow out. And even a couple headlines about China, cracking down again on crypto, like kind of rehashing their negative stance on crypto, all of that. And so we opened the week with Bitcoin pulling back on that news, but then resolved higher literally 1 or 2 days after again. And so, like you said in the thread, I also see that as a sign that pretty much whoever wanted to sell, at least locally, has already done so. So a lot of the sellers are out, peak capitulation is behind us. But like we said last stream too, a lot of the times these bottoming processes could be messy. So, whether we go down and retest low 80Ks again, whether we even dip a little bit under maybe over the coming, few weeks or 1 to 2 months, I don't really have a very strong opinion. However, all in all, I do kind of think that we've hit at least a bottoming process that we're in the midst of, and we're more likely to resolve up over the coming months and quarters than down from here. That's my view.
You actually called it well in the Discord. You said markets feel constructive to me today, and this was your signal to go just a tad bit more risk on. And that was, as you could see, on the 2nd of December, and then we did end up making a move higher. So I think those like short-term shifts are really important in terms of trading, like understanding how the market is reacting to news. I will say this though, and this is something I also mentioned on yesterday's show, there is still overhead resistance. Like if you look at the daily here, you can see that we are fighting with the noodle to the upside. You can also see on the 4 hourly, the POC point of control on the VRVP is still at 96K. So that is just still a little bit of resistance in this area. We obviously front run it a little bit. And then of course, if you go into the weekly and look at the 50-week, simple moving average and these indexes people like to use, we are still below those levels at like 102K. So this is a zone, I think, between 95 to 100. That's not going to be easy to get over. And I said that in my video yesterday, I wouldn't be like full risk on into, alts or just taking on crazy amounts of risk until we did clear some of those zones. Is this a similar feeling that you have as well?
Yeah, definitely. I do always expect, especially after such a big move, that on the first big bounce up to resistance, especially where there's like massive confluence of resistance, like you just pointed out there, we're probably going to meet some sell pressure up there, right? At least temporarily. Whether or not we kind of break through it in the first try or not, I don't really have a strong opinion on. I'm not sure if you do. Generally speaking, though, I do think over the coming weeks and months, we are looking very constructive to at least test higher. And then we kind of see from there. TradFi markets too. So in addition to the crypto specific, kind of like positive tailwinds that you pointed out, the flows inflecting positive again, stuff like that, we're also seeing risk on return to TradFi markets as well. And so that's going to be a tailwind for Bitcoin too, I think. We saw the VIX collapse this week, right? We're seeing the dollar pull back again from what I think is structural resistance, which it just kind of like rebounded off of, right around the 100 to 101 level on the DXY. And for those people who are following more like retail stock names, we're seeing a lot of interest coming back this week in a lot of those high-flying momentum names, right? The Robinhoods of the world, the speculative stocks, robotics, stuff like that. So I do think we're seeing signs of risk on basically coming up here. But yeah, whether Bitcoin breaks through that, resistance level in one go or not, it's hard to say. What do you think?
Yeah. Yeah, and I also think the reaction to those levels is going to tell you the full story. Like, it's not just the levels themselves. I think a lot of people get confused in crypto. Like, they think of these big levels and they're like, oh, if we flip above, we're bullish. If we break below, we're bearish. It's like, it's not as simple as that. It depends. How do the outflows or inflows look at the time? Like, we could see the ETFs are ticking positive again. What's sentiment like at the time? Is it a strong reaction to that level? Is there a big volume candle which indicates interest in that level? Or is it, looking like a bit of a dead cat bounce? So how we react to those levels is the really important thing. What I want to go through now is what's happening with the big players, because I think a lot of smart money, it seems like smart money knows something, and I'll get into why I think that is as we show you some clips here and as we show you some evidence. But it does feel like 2026 has a very interesting setup, and I think, with a macro analyst such as yourself, it'd be great to have that discussion about what the macro is saying in line with how these players are positioning. So we'll go through what the smart money's doing. Then we'll go through the 2026 macro setup, where we have to talk about the business cycle, why the 4-year cycle is potentially dead, and then how you can position for that. But just before we get into that, I want to pick some winners, because you guys know if you have the notifications on and you comment Noti Gang on the videos, become a part of the notification gang, you can win $100. I did realize the hype feature wasn't rolled out to everyone's YouTube yesterday. So I'm going to do a thing in the future where if you click the hype button, you can win 200 instead of 100, but it's not live yet. So for today, I'll just pick another 5 winners. So here we go. Ralph can win $100. Robbery can win $100. What's this? Gin Flicks. I can't read that well over here, but you can win $100 if that's your username. Let's pick 2 more people. Roller can win 100, and then I'll scroll down to make sure I'm being fair. And Aisha can win $100. So if that is you, if you were just selected, go into the comments, email this email with proof that you own that account and proof of comment, and then we will be in touch to enable your giveaway. It'll be in the description below. So if you want to join today, so in the next video, you have a chance of winning $100. All you need to do is click the post notification bell. It's only possible, obviously, if you're subscribed, and then comment Noti Gang in the comments below. And obviously, you'll get the early scoop because you'll be getting the videos notified to you, but you'll also be in the running to win 100. And if you've won before, enter again. You can win twice. If you haven't won yet, keep trying every video. You can win for the first time. So we'll run it that way. But yeah, let's talk about now the big players. So I want to go through a few of these. So the first thing is that the Bank of America is officially recommending clients to put up to 4% of their portfolio in Bitcoin and crypto. I think, Fabian, this is like a longer trend of just the banks, and we'll discuss what's happening with Vanguard in a minute too. But the banks just slowly opening up and slowly just warming to this. And I think a lot of this is off the back of deregulation and the Trump administration. But what's your opinion on this and that general trend of, banks starting to come on board and starting to offer crypto to their clients?
Yeah, I mean, this is stuff that literally defines like a multi-year, if not even, multi-decade trend sometimes. It's basically a global adoption trend. And not only in the US, I think, over enough time, you're going to start to see headlines like this in more and more places around the world, other major nations. I even one day think China will come around, but that day's not today. But big picture, the global adoption trend for Bitcoin and crypto in general is pretty much up only. And I do think the genie is out of the bottle here, in the sense that no matter what kind of administration, takes the US government seats next, whether in midterms or during the next full election, I don't think there's any going back from this. So global adoption trends, I think, are up only. Really, the big story of this cycle, I think, is how that pairs against a lot of the supply headwinds that have come around this cycle, just because in the early days of Bitcoin, a lot of the supply got concentrated in a few big players, right? Whether that's OG whales, whether that's DATs like MicroStrategy, etc. And so you kind of have those two things battling against each other. And so as an active trader, you kind of trade the ebbs and flows between them. But big picture, yeah, the adoption cycle's up only. And one more thing I'll say to end on that too is it's been really interesting, I find, in recent months in particular, to observe the divergence in sentiment between CT, so the crypto native crowd, and TradFi, right? Even if you just go to look on FinTwit, for example. Everyone on CT was freaking out over the past couple of weeks and months, or, I shouldn't say everyone, but a lot of people were. People were calling the cycle being over, etc. And then I looked to the TradFi guy accounts, and they're all like, oh, this is like another dip to buy, So they look at this in a much more constructive light than we do, and as a longer time frame kind of investment that's here to stay. And that's very constructive, I think, because they are the bigger players now, right?
100%. And I think that's also part of the reason, which we'll get into, that you may very well see a Bitcoin peak or another very strong run up next year, which we're going to discuss. But just on the topic of, smart money and the big players in the space, one interesting pivot has been Vanguard. So I want to play a video from 2024 with the Vanguard CEO, and then we're going to take a look at what they've just done.
Spot Bitcoin ETFs. Question came in, hey, we know you're not offering one. Have you changed your mind? What would it take for you to change your mind? We don't plan to, and we don't we're not going to change our minds around this.
Literally said, not going to change their minds around this. 1 year later, new CEO, of course, came in, and they changed their minds. They just announced that they're going to be offering Bitcoin ETFs to 50 million clients. They're obviously an $11 trillion asset manager, one of the biggest asset managers in the world. So what do you make of this pivot? One of the big players, obviously, in the index fund and wealth management space now accepting Bitcoin when they said they wouldn't. Just like Larry Fink, he also had a video where he came out and reneged. We'll play a clip with him soon on his stance on Bitcoin as well, and said it was one of his bad public calls. And that he changed his mind.
Yeah, and I mean, that's been the story of pretty much all the major, or, not all, but a lot of the major financial institutions, like even Jamie Dimon from JP Morgan, who's been historically super bearish on crypto and Bitcoin. And then just in the past couple of years, the whole kind of company pivoted over to accepting it. And I really think that's it's just as simple as, do they really even have another choice? Right? When they're a publicly owned company with shareholders who are always trying to do things in the best interest of their shareholders, they're trying to make money, they're trying to make revenue, and they'd be really neglecting a huge stream of current and also future potential revenue by not going down this path. They'd also be losing clients to other competing brokerages and banks who do offer these products. So at the end of the day, whatever their political stance is or their, personal ideologies, as a public company, I really don't think they have a choice but to come around eventually, right? Because they make money from this stuff. And I think it's really as simple as that.
100%. On the topic of these big fund managers, listen to what Larry Fink had to say today about sovereign wealth funds, because I think this is one of the next big narratives for Bitcoin. And this was trending today. So let's have a listen.
But I can tell you there are a number of sovereign funds that are standing by. They're adding incrementally at 120, at 100. I know they bought more in the 80s. Right. That's fine, and they're establishing a longer position.
I know they bought more in the 80s. That's interesting.
And you own it
That's
over
very
years.
interesting.
This is not a trade. You own it for a purpose.
So he's basically saying you own it over years, and he knows personally a lot of funds that were buying in the 80s. Also, maybe explains why we saw such a big reaction in the 80K zone. Clearly, big players were stepping in at that level. But what do you make of sovereign wealth funds? Because there's all this, talk around ETFs and retail and even these company ETFs and stuff like that. But we haven't really seen this narrative really pick up. I know we had the Bitcoin strategic reserve rumors from Trump, which never really happened in full force. Obviously, they agreed to keep their seized Bitcoin, but they didn't agree to some plan to add a bunch of Bitcoin. But clearly, this is what I've always thought. If you're a nation, if you're a sovereign fund and you want to accumulate Bitcoin, you wouldn't forecast that to the world before you're happy with how much Bitcoin you hold, and maybe you never forecast it to the world because you don't want, you don't want to be front run, so you just accumulate it. Obviously, you'll see that in the price going up over time. You'll clearly see there's a lot of buy pressure stepping in, and that dips are actually more muted because of these funds accumulating, but they might not forecast it. This is what I find like the interesting angle here, because Fink knows these people and they might not even be saying anything. There might be countries that are stacking without disclosing as well. So what do you think of this whole sovereign Bitcoin narrative? Because I think it's something that a lot of people aren't touching on, but clearly is one of the reasons why Bitcoin is becoming, I mean, it's not fully anti-fragile, but I think it is becoming less volatile as an asset.
Yeah, that is interesting. I actually hadn't seen that clip before. So yeah, that was interesting to hear.
It's just a few days ago, I think. So that would be why.
Right, okay. Yeah, in general, though, I really think the trend is, so, okay, historically, for the past even few decades now, most countries around the world, whether in sovereign wealth funds or even central banks, would own a majority mixture of really two broad classes of assets. They were US assets, or very heavily overweight to US assets, and they were treasury assets in general, whether local or foreign, so their own, or for the most part, again, US treasury assets. And I think both of those main themes have really kind of come into the spotlight really over the past few years, but even accelerated this year in terms of calling into question just how safe and diversified a portfolio that's comprised of those things really are. Right? We know treasury assets haven't done well for many years now, basically, going back to 2020 or 2021. And likewise, also US assets, which a lot of the world was very overweight, they've kind of shown that when shit hits the fan in the US, everyone's exposed. And so I think since then, we've seen a big trend from both central banks as well as sovereign wealth funds and even just private investment funds and firms try to diversify away from that. And we don't currently have a lot of good options, right? A lot of emerging market stuff is very high risk, very uncertain. So they have a hard time really allocating in size there. And then as far as commodities go, gold is obviously the big one. But the other one that kind of comes to mind as a potential long-term diversifier really is Bitcoin, and it's emerging now. And so while I don't think that they will be, accumulating it anywhere near the pace that they accumulate basically every other asset on their balance sheet, at least not this decade, it's still a process of going from zero or no allocation to some of them going to some level of allocation. And that's probably going to continue over the next few years, I would think.
Yeah, I think so as well. And you could see also, like the big players, not just BlackRock and Vanguard, even JP Morgan is now offering institutional clients a structured Bitcoin product using IBIT. They're going to basically have like a big payoff if Bitcoin takes off in 2028 with some downside protections and parameters baked in. So these are like more specific instruments as well. So it starts with like the Bitcoin ETFs, and then you can build onto your own complexes. Like this is essentially like a Bitcoin backed bond. Like that's a really interesting use case that we've never seen before. And then like there's the question about, once this is more solidified, can you have Bitcoin backed mortgages? Bitcoin, I feel like it just legitimizes like Bitcoin as an asset class, and the trend is happening. It's slow. It's not overnight, and you can look at price and get all bearish if we go to 80 or 70, 90, whatever. But like over time, like the trend is pretty damn clear. Like, and that's why I'm a long-term Bitcoin holder.
Yeah, definitely. I don't know if you saw, but also MicroStrategy just came out, I believe it was earlier this week, and said that they were looking at actually lending against their Bitcoin. So on that point you brought up, I do think Bitcoin lending markets are, a big new vertical that's probably going to grow over the next few years for sure. Yeah.
But you know why MicroStrategy is doing it?
Of course. Yeah.
Because they need to avoid in my opinion, they need to avoid the downgrade. So the way to the MSCI downgrade, which removes them from indexes or indices. So the way that they do that is through becoming through offering advanced instruments, so they're not viewed as a passive fund. Because if you're just holding Bitcoin and you're not like a revenue generating business, then you're just a fund, and they want to get rid of that. If they can have these bonds and instruments and like activate some of their holdings, they can classify as like a revenue generating company and not qualify for the downgrade. Also, there's also rumors that maybe they're doing that to to also help give them more flexible options around financing, so they can shift more debt around to protect themselves a bit more if there were potential downside on the asset.
Yeah, that's really interesting. Actually, it could be.
That's what I've heard from good analysts. So yeah, and then finally on this section, before we get into what I think is really driving markets and what is really, really important, and I'm sure you'll love to talk about it because you're also a macro enthusiast. But finally, Eric Trump, his America Bitcoin just bought 363 Bitcoin worth $34 million. Don't know if you have an opinion on this, but this is also fresh news off the press. So more Trump family Bitcoin buying is not a bad thing. As long as he's in office, it's a good thing.
Yeah, definitely. I mean, it shows that they're still aligned, even if the amount of Bitcoin they buy, isn't really needle moving by itself. But it does show that they're still aligned. I do expect it to continue as long as they're in office for the most part. And I also, on a related note, I do expect them to kind of ramp up not only market, but crypto market specific talk going into the midterms as they try to kind of, re-rally their voter base, right? Obviously, a big part of their initiative in getting elected in the first place last year was trying to rally the crypto community because they ran the stats and X percent of Americans own Bitcoin, and they thought that was significant. I'm not sure exactly what that number is, but whatever it is. And since then, the crypto community's obviously had a pretty bumpy ride. So I would think they're going to try to lift spirits in that market again, probably ahead of midterms, but we'll see.
I think so. We're going to discuss that because the odds are rapidly shifting and that could have ramifications on macro. But let's get into macro, the 2026 macro setup, because ultimately lines on a chart, the 50-day moving average, whatever it may be, is not as important as liquidity. Bitcoin is a liquidity sponge. It's a risk asset until proven otherwise. So risk assets are going to perform in environments that are conducive for risk assets to perform. So what we need to do to work out whether 2026 ultimately will be bullish, despite the setup looking strong in other ways, is looking at the macro setup. And this is obviously where you shine as well. So first thing I want to discuss is ISM. I know Raoul Pal talks a lot about this, but the ISM index is actually much lower than it's been during previous cycles. And Bitcoin typically front runs ISM, so it performed really well. But it is anticipated that we will see an uptick. And if you look at the last 3 cycles, Bitcoin only peaked when ISM went above 55. It hasn't really had a big run yet. And I guess this is like the core of Raoul's thesis, that we should see an uptick in ISM. We should see easing liquidity conditions in the H1 of 2026, which is going to be the next trigger for a Bitcoin run. But just wanted to ask, is this something that you pay attention to? If people don't know what ISM is, it's essentially tracking the business cycle.
Yeah, it's definitely one of the macroeconomic indicators that I look at. So the ISM essentially slightly lags the general kind of growth and business cycle in the US economy. And the business cycle or the growth cycle actually also lags the liquidity cycle. The liquidity cycle really does lead all of this. And so they all kind of tie in together. But like you did say, I do expect, even though there are kind of bigger picture concerns around the liquidity cycle when looking at it, over the time frame of maybe the next couple of years or so, but I do think at least into the first half of next year. So, over the next couple of quarters here, we are more likely to see an impulse higher in global liquidity and especially US related liquidity than the other way around. And that really leads everything, right? You see an impulse higher there, you see an uptick in the growth and business cycle, and that bleeds into all risk assets, including Bitcoin. So I think at least over the next couple of quarters, my views are pretty much aligned there too.
It's very interesting to see how, it often lags, and you can actually see how Bitcoin typically peaks around ISM peaking. So in 2018 cycle, ISM peaked, Bitcoin peaked, ISM peaked, Bitcoin peaked. Bitcoin has obviously done really well off the back of other catalysts, but ISM hasn't actually peaked. So this is a very interesting setup potentially. If ISM starts to explode, could that be the trigger for the next leg on Bitcoin? It's just something, one of the indicators to keep an eye on. The other set of indicators that you can look at are assets like copper, like the copper gold ratio, the ISM PMI ratio. All of these look like they could have a bounce similar to prior cycles. I think it's interesting when you start looking at the evidence because, there's this whole theory about the 4-year cycle, and everyone thinks that the 4-year cycle is because of the Bitcoin halving. But then if that's the case, then how come equities have historically topped around that time? And how come the copper gold index has historically topped around that time? And how come ISM has historically topped around that time? Like, are you saying, if you're a proponent of the 4-year cycle, you're essentially saying that Bitcoin's halving cycle matters more than the entire US manufacturing index or the entire US business cycle, which to me doesn't make sense because Bitcoin is a tiny, tiny piece of the business cycle. So in my opinion, the 4-year cycle never really existed. And we're going to see that in 2026, and this will disprove it once and for all. And I think that's actually the last thing that Bitcoin needs to disprove in order to actually fly, because so many people still believe in it, and so many people are charting it, and so many people are saying that it's over because it was over like this in 2021. It's kind of become this self-fulfilling prophecy. If Bitcoin can rally in the first half of next year, imagine how that would change the dynamic of the market, because people are like, wow, okay, this is a liquidity asset, which it always has been, by the way, but all the doubters would be like, this is a liquidity asset. We have to get back in because we were wrong about the 4-year cycle. But currently, that's still not the opinion. There's a lot of people following technical analysts that are buying into this theory. But yeah, interested if you have a theory on that as well.
Yeah, I mean, simply put, like, the markets are never that easy that you can make a cycle-defining trend-based prediction based off of a heuristic that's as simple as like a 4-year cycle, right? So like you said, I mean, really the sample size for evidence for a 4-year cycle is only 2 cycles in the past, right? So it's an n equals 2 sample size, very small in the first place. All of them happen to coincide with major macro inflections as well in both the liquidity and growth cycle. And for what it's worth, you know, for like any impact that the Bitcoin halving cycle actually had on price in previous years is going to have much less of an impact today, because the halvings are a smaller proportion of total supply. There are now bigger volumes in the market that matter more, and most of those are global and institutional flows, which also follow, you know, broader macro cycles. And we're no longer this fringe asset that trades just on our own in isolation. So yeah, never been a believer of the 4-year cycle either, but I think now more than ever, if we do happen to top around here, then it's probably also going to be macro related more than anything else, I think. But yeah.
Yeah, I mean, you just have to ask yourself, how come, if the 4-year cycle is so important, how come the NASDAQ, the US tech index, also topped the week that Bitcoin topped in 2021? Like that I think that really says it all. Bitcoin's not dictating the NASDAQ; it's the other way around. So, you know, because of risk asset, until proven otherwise, it'll continue to follow markets. So, I want to get your opinion on rate cuts, because rate cut probabilities for the next meeting have skyrocketed. I mean, it's all but confirmed. We have multiple big sources saying there's going to be a rate cut. Has anything changed versus last week on this, or you know, do you think this is going to be another catalyst for markets? And then I want to discuss what could happen with midterms as well.
Yeah, well, at this point, I think it's all but guaranteed. I also thought it was last week, obviously, but generally speaking, the closer we get to the actual date, and implied probabilities are leaning very heavily in one direction, which they always are ahead of the date, whether it's for or against a rate cut. Because we know that the Fed likes to telegraph their move. So that should give us higher confidence that that is going to be the outcome. So I think a rate cut's basically a lock at this point. Now, the next question on my mind is obviously, you know, as we get right there, we're about maybe 5 days out from the next FOMC as of the date of this recording. How much of that is currently being priced into markets? Obviously, we have US equities kind of back at their all-time highs or very close to. Bitcoin's lagging a little bit behind, but you know, it had some issues of its own. So I prefer to look at equities as a better kind of indication of what the markets are currently pricing in right now. And I do think there is a possibility that we could get that rate cut alongside a more hawkish presser from Powell, just because the last time Powell spoke at the end of October during that FOMC meeting, he clearly stated that they weren't sure if they were going to cut rates if they lacked enough economic data ahead of that. And since then, they haven't received most of the really important data reports between then and now. And so I think in order to kind of justify that they're doing a rate cut this meeting, he's going to try to counterbalance that a little bit by letting markets know, look, we've been flying blind for the last couple of months. We're going to preemptively cut one more time this meeting, but looking ahead to January, nothing's a guarantee. From this point forward, we're kind of putting our foot down and saying we need to see the data support more rate cuts before we lock in anything else from here. And so I do fear he could come out a little bit hawkish in the presser. There is such thing as getting a hawkish rate cut. And we're just going to have to see how the markets react to that, right? But there could be a little bump there in the worst case scenario. Big picture, though, one thing I do love about the current setup. So if you quickly want to, just on that page, go to the probabilities right there. Markets are currently pricing in. If we really zoom out and look ahead to the end of 2026, they're only pricing in 2 more rate cuts in 2026 after this next meeting, right? And that would bring us down to around the 300 bip level, or 3% on the Fed funds rate, give or take. And the Trump administration, alongside Bessent and even Hassett, who's the runner-up to be the next Fed chair, has alluded to kind of being on the same page here too. They've stated that they believe that the Fed funds rate should be closer to the 2.5% mark. And so that's still another 2 whole rate cuts more than the markets are currently pricing in. Exactly. And I do think that given that we're going into midterms next year, we're getting a turnover in the Fed board and the Fed chair by next May, that there is more room for rate cuts to reprice down. In other words, price in more cuts than the other way around. And so that kind of skews the big picture probabilities in the bullish direction for risk assets, in my opinion. Whatever Powell comes out and says this meeting, I think we're going to get more rate cuts than the markets are pricing in over next year.
You mentioned something about the inflation rate before. Inflation's actually come down a bit. I know it's still up over the year, but it's come down from its local high, according to Truflation, which is more of a live index. So that's just something to keep your eye on, potentially, as another reason why, even without all the data, we will get a rate cut here. But I agree, this is a big, this is potentially a bullish tailwind if we do get it. So keep your eye on that. In terms of the midterms, you did mention that briefly, like Democrats seem to be winning, at least according to prediction markets. Is this a trend that, how do you think this impacts markets? Do the Republicans, and I'm speaking, pretty basically here with like limited political knowledge, but do they try and aggressively pump markets before midterms to try and win some votes? Does this ensure that the easing cycle continues? If the Democrats do win the House, does this impact anything? What's your read on this situation?
Yeah, definitely. So the first order effects, I do think there is some level of positive correlation between these odds and Bitcoin, or between the Republican Party's odds in particular and Bitcoin, right? Because the Republican Party is seen as pro-crypto, they still have a few pieces of legislation they need to pass as it relates to crypto, which might be harder to pass if they don't do so before the midterms, and then they lose some of their balance of power, after the midterms. And funny enough, we have kind of seen a correlation a little bit. Like, those odds did happen to peak around where Bitcoin peaked a couple months ago, and both of them have been down together since then. Now, I do think there was much bigger forces at play, but I do think there's, a little bit of correlation there. But then the second order effect, I think at this point, the odds are kind of well priced into Bitcoin, if not more so, given how far we've come down. And from this point forward, it really does put a lot of pressure on the Trump administration to do whatever they can to increase these again going into midterms. And what does that mean? It means stimulating the economy and obviously propping up financial markets as well, right? Those are the 2 most obvious kind of direct corollaries to their odds of winning. So yeah, I do think this actually does pave the way for a more bullish first half of next year. And my outlook for next year is that markets start to front run this, as well as the new Fed chair coming in during May 2026. And we probably get in, you know, I mean, things are always subject to change, but my outlook as of right now is that the first half of 2026 is shaping up to be bullish for risk assets because of those two things and the fact that markets probably front run that. And then once we get to that point, once we get closer to midterms, once the new Fed chair, you know, takes the seat, depending on how much has been front run into that, well, you know, markets don't like uncertainty. So maybe as we get really close into midterms, things could get a little bit shaky again. But I do think these will be pretty strong tailwinds for markets, at least up until then.
Strong chance Bitcoin's peak is H1, and then equities maybe around a similar time. And then, I don't know, we'll see. I guess we'll constantly adapt, and hopefully we continue these Friday shows to keep people in the loop. So look, we both agree at this point the setup's bullish. Of course, take your own take on it based on the information we gave you. I think there's been some interesting topics, but I want to discuss altcoins quickly. We have seen ETHBTC breaking up for the first time in a while. This is quite interesting. Firstly, do you have any take on this? Because this is also at the same time that dominance is actually looking weak. It's one of the first times I've seen dominance, even in a weak market, really not wanting to move higher. So I don't know if you have an opinion on both of these two charts together. I think it paints the picture that if we have even just a flat Bitcoin or a positive Bitcoin, like you should see some alts really outperforming. But yeah, what's your take?
Yeah, this one's a little dicey to me, to be honest. And I'd like to get your opinion on it after, but I'm kind of, I have two thoughts on it. So, and they're contradicting to some extent, right? So the first is that you're right. We are seeing some relative strength in ETH relative to Bitcoin right now. Now, whether that's just a little bit of a mean reversion after correcting, you know, much more than Bitcoin since the top, that remains to be seen. I'm kind of leaning towards that camp. But we are also seeing BMNR, which is Tom Lee's Ethereum DAT treasury company, buying more Ethereum every week than MicroStrategy is buying for Bitcoin. And that's still continuing to this day, which, to be quite honest with you, I don't know how he's doing it. I admittedly haven't taken enough time to do the work there. That's definitely an area of research I'm going to look more into. But however he's able to do it, he's been buying more ETH every week. So as long as he keeps that up, yeah, we could have, you know, a short period of perhaps ETH outperformance on this bounce. But bigger picture, and this is where my, you know, conflicting view comes in. If ETH also carries the same kind of structural overhang now that Bitcoin does, in the sense that the large treasury companies, you know, own a big portion of supply, and there will come a point where they're probably forced to start capitulating and dumping that. And I think that that's going to come before most Bitcoin treasuries capitulate, just because they might have a hard time raising, you know, additional funding, stuff like that. ETH's more volatile, it's seen as a lower quality asset, etc. And I can't remember the exact figures, but I think collectively they own about 6 to 7% of the entire Ethereum supply at this point. And
Wow.
that's bigger. Yeah, that's actually a lot bigger than the percent of supply that MicroStrategy owns in Bitcoin, right? When looking at it as a percent of total supply. Now, obviously, percent of market cap is kind of, or percent of supply, it's not the be all end all. Like what matters most is liquidity on the markets, etc. But big picture, I'm still kind of wary of that. So I do think, like, if you ask me what's my view, say 1 year from now, I'm in the Bitcoin camp. I think it outperforms.
Definitely. Big picture. But if you think about it logically, and I think you would probably agree with this, if Bitcoin has a strong start to the year, let's say Q1, Q2, and obviously that means that the market should be doing well. So Ethereum should outperform because it has less supply on the market. Because there's more supply being held by these DATs, and they can accumulate more aggressively. So that should see maybe ETH outperform for a little bit before that. Obviously, in a negative environment, you would see those tailwinds flip into headwinds pretty quick, especially as like concerns over centralization and, you know, potential unwinds start to come in like they have for MicroStrategy. That could definitely be a catalyst for a decline, but it actually reflexively works to the upside. And that would obviously be very good for alt. So I hope that's the case.
No, you're right that it does. And I'm totally open to, you know, some short-term outperformance here. I don't have a very strong opinion on it, but you're absolutely right that I think as long as the ETH DATs don't dump and they actually continue to accumulate, Bitcoin has other structural issues, such as maybe, the miners turned AI data centers who might be continuing to dump. They have more kind of bigger OG holders who believe in the 4-year cycle who might be continuing to dump. They also, and I don't see a lot of people talking about this as a potential tail risk, but there are other large sources of structural supply that might come to market one day. For instance, Bitfinex. So the US government actually owes Bitfinex something like, I can't remember the exact number off the top of my head, but it was around like 100K Bitcoin, which is like $8 to $9 billion at this price of Bitcoin, which will probably see return to them at some point. And they'd be looking to liquidate that and return it to creditors and token holders when they get their hands on that. So there are like all these sources of supply overhang on Bitcoin that ETH doesn't have as well. And the biggest one for ETH is just the treasuries right now. So as long as they continue to hold, we could see some outperformance. I agree.
In terms of the broader altcoin market, we identified before the show, we wanted to do a bit of a deeper dive on where one of the best places to get edges in the market right now. And this is on prediction markets. So this is something I plan on doing a lot more content on over the coming weeks, because I've been experimenting with it a lot. I'm even using some AI to do some automated trading and building bots and all this cool stuff behind the scenes that'll come to light shortly. But I know you've also been using prediction markets for months, especially on the pre-market side of things. So maybe you can give people a run through here of how you're doing it and why this is one of the best places to be spending, time and energy if you're trying to get an altcoin edge over the coming months.
Yeah, definitely. Prediction markets are very interesting. I actually love them specifically for pre-markets, right? So what you have on the page there, all of the kind of pre-TGE tokens that are expected to launch soon. And the reason I really like them for that is because generally speaking, most of the time I'm actually looking to take short positions in a lot of these. We know through, countless anecdotal data over this past year and even before then, that pre-markets tend to overvalue a lot of new tokens, and most of their price action kind of starts to be like down only after launch, right? We've seen that so much recently with things like Plasma, and a whole bunch of others. And recently, we were actually still in this phase where even though markets were correcting, the pre-market prices of a lot of these new tokens, like things like Stable, which is an upcoming Plasma competitor, right? It's a stablecoin chain. You see that on the dashboard in front of you. Things like Mega ETH, things like Monad before they launched just last week. They were being valued at absurd valuations still, despite the markets coming down. And I think a big part of that mispricing is that a lot of people are actually scared to short these things on traditional pre-market venues. Exactly. Because we've seen so many times that people who have tried to short these get blown out, right? You get short squeezes on, let's say, hyperliquid pre-markets, Binance pre-markets, etc. And so what prediction markets do is they basically allow you to take an option out, basically a put option. They allow you to bet on the price at a certain point in time. So in this case, they're usually structured as 24 hours after TGE. And you can't get liquidated on the position before then, even if they have a short squeeze, somewhere in between that. And so I like to use them for that. And over the past month or so, I've been taking out a lot of them on some of the newer tokens coming up. I, bought No on $4 billion and $5 billion on Stable about a few weeks ago. That's been doing pretty good. I also put a few no bets on Mega ETH, as well as Monad before its launch just last week. And I think that's actually one of the cleanest ways to take advantage of that discrepancy between what everyone knows the price will do after they go live and the inability for people to properly capitalize on it and close that price gap before they do go live. I think pre-markets are a great venue for that.
I think it's really, really smart. I also like the point you're making around, like, when there's market panic, a lot of people will puke their positions. They'll panic sell. But on a pre-market position, you can't really panic sell because you're just in a trade. So there's not like spot selling, spot dumping that's happening. And unless people are willing to step into short, they're probably a little bit less price reactive in a way, unless there's like a big, liquidation wick. But that scares a lot of people off the perp market. So the fact you can kind of trade the same thing on a prediction market, like the same outcome, but without having that risk of a liquidation, I think is huge. So definitely one area to look into. And I just think prediction markets in general are just, I mean, it's very cool because you don't need, like, the problem with options on like Deribit or something is it's quite in depth. Like, when your strike happens, depends on your outlook and the structure of your entire portfolio, and how expensive the premium you pay also depends on the market. And there's all of these things to factor in. It's like actually hard to like configure a proper like put option or a call option. Similarly with perps, you have a lot of people just long, but they don't understand they're paying funding. Is funding positive? Is funding negative? Like, you can pay in a bullish market so much to hold your position. In a bearish market, you pay so much to hold your short. So it can be just so expensive to play these games if you don't configure them right, that for the average investor, it just doesn't make sense. And I think prediction markets solve that because it's a simple yes or no. And if you feel like you have an edge, so your perceived percentage is lower or higher than the percentage that you're getting on the market, then you could take that edge without taking on this other risk. So I think it'll only become a bigger trend. It's obviously becoming a massive trend in like politics and sports betting and stuff like that. But I think it'll become an even bigger trend in crypto. Obviously, we've been doing it in the group, and you and I have been doing it personally. But probably something we'll continue to do more content on, because it does give you more optionality beyond just holding a position or buying or selling. Like, that's a very basic way to play markets, especially when it comes to other events, like things that you can't trade liquid, like pre-markets. It's probably the best product market fit so far for crypto.
Yeah, no, definitely. And I think another heavily overlooked aspect of them is that you don't only need to use pre-markets to speculate on things, but you can also use it as a hedge in many cases. So even here with like the pre-TGE markets, let's say you're eligible for an airdrop and you know your airdrop quantity, and you want to hedge at a certain price, but you don't have the capital or don't want to take the risk of going short these things and getting blown out. Well, you can kind of hedge a portion of it. Maybe it's not a perfect hedge, but you can kind of play around with hedging a little bit of it using pre-markets, right? Also, political risk or geopolitical risk. Let's say you identify one really major source of potential tail risk for Bitcoin, and there's a pre-market on it, such as the Republicans losing, the House in midterms, or even something as wild as, let's say, Satoshi moving funds from his wallets before 2026. There's literally a pre-market for that exact thing on Polymarket right now. You can hedge risk in various ways with these things, right? It's not only
I just thought of something,
money, but also to manage risk. Yeah,
I thought of something. So if VCs and funds, they're obviously going to want to hedge short, right? Because most of their positions are investments, so they're naturally skewed to the long side. Could that potentially mean there are tokens which are undervalued pre-market in some instances if it was a liquid market and they were hedging, which gives you the opportunity to buy the yes position, if that makes sense? Because like if you're a fund, if you're a VC and you want to hedge but you don't want to short, you can basically it'll be pushing price down, especially the bigger players. It'll be pushing the percentage odds down. So anyone that votes yes could actually make money just off the back that someone's hedging and suppressing the market. Have you been playing around with that as well? Obviously, it depends on the launch and the liquidity and that sort of stuff as well.
Yeah, no, it's definitely possible. I mean, pre-markets, just like options markets, are public and free markets like everything else. And so you can get discrepancies just based on, large structural buyers or sellers leaning one way or the other. And if you think you have a better opinion on that, there could be, in some cases, alpha to capture there.
An interesting thing that I'm doing as well is I'm building bots to be able to notify me when there are changes. Because if there's a percentage change, like a rapid one, it could indicate something's happening before the news even breaks. So there's all sorts of alpha to capture from the market. Similarly, if you saw a big price reaction before a headline. And often this stuff will happen quicker than the market is able to react, like once the news breaks. So I think all this sort of stuff is really, really interesting. But yeah, I think we'll wrap it up on this note. I think we've given people a lot to chew on today. So I think it's been a great podcast, honestly, and quite informative on my side and maybe your side as well. So I really enjoyed it, and yeah, we'll be back. Maybe over Christmas we'll have like a couple of weeks where we might not do this, but I'm keen to do it again in the new year and keep like the Friday slot consistent with you. We'll see you guys in the next one. Remember, if you want to win $100, comment on this video that you're part of the Noti gang and put notifications on, and we will see you later next Friday. And yeah, catch you guys in the next one.